Okay, from the IPO market, let's now move to what's happening within metals. And important developments just this morning, the fact that the DGTR has now proposed imposition of a provisional 12% safeguard duty on flat products for about 200 days pending a final investigation. Let's take this point forward. We've got Aditya Welekar joining in on the show right now from Axis Securities to talk about exactly that. Aditya, hi, good to have you on the show. Given that the industry was rallying for 25%, but expectation was about 10 to 15 is going to actually come in terms of safeguard duty. Tell me, how does this really move the needle, if at all, for the steel industry?
Yeah, good morning. So I guess, yes, you summarized it. So the expectation was quite higher, 20% to 25%, and the outcome of 12% is slightly below that. And part of it, which I want to highlight, is that in the first week of March, those steel mills have already taken price hikes in the tune of 1,000 to 1,500 rupees for the flat HRC, that is hot rolled coils and cold rolled coils. So with that backdrop, the stocks have already anticipated that such a move should come, and the share prices have reflected that partly. And we have seen from the with these investigation and the kind of imports which have got restricted in the month of February. So if you see, the imports have reduced cumulatively in the month of Jan and Feb to the tune of 40%. So all these factors were indicating that the bottom for the steel names, the valuations were also not very demanding at that point of time. But now with the rally, if you can see that the share prices have rallied since last 1 month, and with that the valuation gap which has emerged earlier is part of it is closed, I will say. So now the valuations are not, I will say, very attractive at this point of time, because all these positive news, the hike which the steel mills have taken are in the price.
All right. Hi, Aditya. Morning. This is Shrishti also joining in. So, you give us some sense what this news flow means for the industry, but help us with your thoughts on which companies will be the biggest beneficiaries if this recommendation of imposition of 12% provisional safeguard duty gets implemented.
So what does this mean is that without the safeguard duty, the imported steel prices are trading almost at parity with the domestic HRC prices. And if we go ahead and impose 12% safeguard duty, then that gap between Chinese steel and domestic steel prices, that gap increases to rupees 5,000 per ton. So there is some buffer for steel mills to increase the steel prices because of this gap which is emerging. So ideally, means this gap is most of the time the gap is there, and with this 5 rupee emergence of rupees 5,000 per ton gap, the steel mills can further go ahead and increase prices to the tune of 1 to 2,000 rupees per ton. So that is with respect to your first observation. And then coming to the stocks, the sensitivity of the steel prices is highest for a company like SAIL. So every 1,000 rupees per ton increase in steel prices increases the EBITDA by around 14 to 15%. Because SAIL has a high fixed cost base. For Tata Steel, it is near about 4 to 5%. So incrementally, if you see the impact of such a increase in if the steel mills further take a price hike of 1,000 to 2,000 rupees per ton, the incremental impact will be more on sale rather than other large steel players.
All right, so those were the will be the biggest beneficiaries. Watch out for SAIL as well as JSW as well as Tata Steel. But Aditya, the domestic steel prices, they have seemed to be increasing, especially in the last 5 months. What the reports are suggesting that there has been an inch up of 5%. Give us some sense there. Where do you see the steel prices headed?
So, as I said, in the first week of March, those steel mills have taken price hikes to the tune of 1,000 to 1,500 rupees per ton. That was in anticipation of this duty coming in. So that is number one. And then now from here onwards, as I said, there is a room for buffer for the steel mills to further increase it to by 1,000 to 2,000 rupees per ton. But beyond that, the price trajectory will be dependent on the China factor, the ex-India factors, like what will happen in geopolitical scenario. So March is usually a seasonally strong quarter for China because the construction activity picks up. But the news flow coming out of China is slightly mixed. The housing property sector, the property prices are not picking up. So that is one on a macro front that is slightly negative. Also, with the imposition of tariffs from US and further the European Union has also slashed the slashed the import quota for India by 23%. So all these protectionist measures are kind of putting an uncertainty towards supply chains, and the steel may redirect from the US market, from the exporting countries like Vietnam, China, and other Southeast Asian countries to India. So that kind of risk is still persists. So the macro factors are not very conducive because of these because of this emergence of protectionist measures. So Vietnam has also taken a protectionist measure. So all these factors, for further steel price hikes, we need to see and continuously monitor how the trade dynamics flows in the steel sector. So immediately we see some positive sentiment and a buffer for mills to hike prices by 1,000, 2,000 rupees per ton. But beyond that, it all boils down to the geopolitical scenario, and especially to China, because the Chinese domestic economy and the domestic property sector is slightly weak. And despite the stimulus measures, it has not really, we have not really seen any positive pickup in the property prices there. So that is the entire backdrop in which we have to see the metal sector.
Okay, interesting. Good to have you then, Aditya, on the show and get in your take on which way things are actually moving for the metal sector right now.
Thank you.
If you like this video, then like, share and subscribe to ET Now.